Hey everyone, welcome back. Today, it's going to be a bit different than normal. We're going to be talking about Chewy. If you're new around here, I wanted to quickly point out that you can follow along to any of my valuation videos. All you need to do is scroll down to the description and there will be a link for the model. You will need to make a copy of this model, but that will then grant you edit access so you can follow along and adjust my assumptions as needed. So back to Chewy. I normally don't talk about meme stocks. I'm not entirely sure if Chewy is a meme stock yet, but it could be headed that way. A quick background if you're not super familiar with Chewy. Chewy is an online e-commerce site that sells pet food and pet supplies. It was founded by Ryan Cohen, who is currently the CEO at GameStop and he has a bit of a loyal following. He actually sold Chewy back in 2019 for $3.5 billion. The reason this is sort of a meme stock currently is Keith Gill, aka Roaring Kitty, aka Deep Effing Value, recently filed a 13G with the SEC stating that he owns 9 million Class A shares, which is just under 7% of the Class A shares. Something to note though is Chewy actually has two classes of shares. They also have a Class B, which has almost double the amount of outstanding shares at just under 300 million, while there are 137 million of the Class A shares. The Class B shares also contain 10 votes per share and largely held by insiders. So from a voting standpoint, Keith Gill actually only has 9 million of the 3.1 billion total votes, or just under 0.3% of the total vote, but owns just over 2% of all shares of Class A and B. Class B shares are not sold on an exchange, so if an insider wants to liquidate them, they actually have to convert them to Class A shares first, which will lose its voting power. So over time, if Keith were to hold this position and insiders were to sell, his voting power would actually increase, assuming no more Class B shares were issued. So anyways, back to Chewy and its recent share price. I always find this stuff interesting, but the meme stock cult, algorithmic hedge funds, and just regular old investors are definitely paying attention to Keith and what he is posting online, whether that's Twitter or YouTube, and it's making changes in the market. On June 27th, he actually posted a tweet of a cartoon dog. Speculation popped that this was a reference to Chewy, and on that day, Chewy actually popped from $28 per share all the way up to $36 per share. We don't know if he ended up exiting his position that day, as if you actually change your position by more than 5%, you have 10 days to file if you are a passive investor. So he would have until the end of next week's, like July 13th or something like that, if he sold off more of his position. And if he sold less than that, but his position still drops below 5%, then I think he actually has 45 days to disclose. So anyways, I thought I'd take a look at Chewy and see if he was on something and if it is a good looking company, or if he's just seeing how the market will react to his moves. So first thing, I was actually surprised to see Chewy has pretty good cash flow from operations. In 2023, they generated almost $500 million from operations, even though their net income was only $40 million. This led me to realizing they have a lot of non-cash expenses, primarily stock-based compensation and depreciation, which together amounted to $350 million in 2023. Something to note here is they did have $240 million of stock-based compensation, which is a lot, I feel, especially for a company with such thin margins that hasn't been operating profitably. But maybe this will come back down in the future, as historically this has been closer to $100 million annually. So let's jump into the model now and see how things are looking. I've modeled in what I think is actually nominal amount of revenue growth. They have started 2024 actually with only 3% growth in Q1, but I have them coming in at 8% for the full year. This is slightly down from their growth in 2023, which was at 10%. After this, I have them actually flatlining at 7%. I believe this represents nominal increase from inflation and then a nominal growth on top of that. So a pretty achievable growth rate in my mind. COGS have actually been trending down ever so slightly, so I have that continuing, and then have them ending around a high 60% by 2033. For reference, Walmart COGS as a percentage of sales is actually around 75%. So they do perform better than Walmart, but they also sell an item that consumers will spend more on for their loved family members, aka pets. While Walmart sells everything they can as cheap as they can, so not as much flexibility to increase margins from Walmart's standpoint if they want to remain competitive in their space. SG&A needs to come down. I have it dropping 8% a year for the next couple of years, and then trailing off at 18%. This can actually easily be done if they scale back their stock-based compensation. Then lastly is advertising. This remains at 7%. Chewy absolutely needs to continue acquiring customers and pushing their brand, in my opinion. So not a lot of room to cut this. They absolutely have to be a top search result when you search for pet supplies online to stay competitive. So with all of these, we actually have revenues doubling over the next decade, from 11 billion in 2023 to 22 billion in 2033. Cash flow goes from 100 million in 2023 to almost 1 billion in 2033. I think this is actually a pretty safe valuation, assuming e-commerce doesn't die off and Chewy can continue to expand and build their brand. With all of these assumptions, we actually get a valuation between 7.2 billion and 14.6 billion, with 9.5 billion being right in the middle. So as of making this video, Chewy is actually trading at around 11 billion, so slightly above our middle range valuation. But not by a crazy amount. If you're more optimistic on the revenue growth or cost-cutting initiatives, you could easily justify today's valuation. If Keith has been building this position for a couple of months, then his average price is actually probably a lot lower, as well, the stock was about 60% of its current value just a month ago, which would have put the market cap around $7 billion or so. Chewy could be an interesting one if it wasn't for all the media attention. It's getting now. I'm not going to be entering Chewy, but I also stay away from stocks that have a lot of speculation and wild swings in valuation. There's probably money to be made here, but it's a bit too volatile for me to sleep well at night if I had a position. I'd say I'd check back in 6 months to see how things are going, but if Keith is still holding a position, I'd anticipate the stock to stay elevated. And once loyal retail investors actually enter, sometimes they never leave, like we've seen with GameStop. And that's something I don't want to get in the middle of. Anyways, that's all I had today. I hope you found this one interesting, and thanks so much for watching.